Hi everyone. So thanks for tuning in. So recently we have seen a lot of volatility in the debt market, and in nearly 30 days, you can say, two RBI monetary policy. So it is a unusual thing to happen. But in these two policies, RBI hiked the repo rate by almost 90 bips. Today, we have our esteemed partners from the distribution fraternity to share their views on the current debt market and what we can expect going forward. Also, while we discussed the importance of investment, we will also categorically discuss about the importance of long-term investments and about a unique offering by Nippon India Mutual Fund. So before that, let me introduce our esteemed partners. So we have Mr. Prakash Jain from Earth Prakash. He is one of the most promising partner from East. He has done CFA and he is certified financial planner also. He has more than 15 years of experience in the financial market and has offered investment related services to more than 500 families. So, welcome, sir. And our second panelist is Mr. Anand Kirati from Augment Capital Services, Bangalore. He is the managing partner and the head strategy there. He has more than 20 years of experience and they manage more than 450 crore of AUM. He is also very active on social media and he's an influencer on LinkedIn and Instagram. And every Wednesday, you should see that, to all the viewers, you should see his YouTube channel. So every Wednesday, he also publishes a video on personal finance. So welcome, sir.
Thank you.
Now, our third partner is Mr. Vikas Gupta. So he is from Earth Prakash. Vikas, sir, he is from Kangaroo Associates. Vikas is a seasonal finance professional with more than 25 years of working experience with multinational companies like IndusInd Bank, DSP Merrill Standard, Chartered Bank, GE Capital Transport, Financial Services, ANG, Grindlay Banks, IDFC, and GM Financial. So he joined mutual fund industry in 1997. So he's a veteran in this industry. He is also very keen towards new technologies, and he recently helped his friend to install 10 kilowatt of solar rooftop in his school. So welcome you, sir. And our final panelist is Mr. Rajesh Prasad. He is a graduate from IIT Kanpur and IIM Bangalore. He held many senior level roles in corporate sector. So Rajesh sir promoted Wellspring Private Limited in 2016, which is focused in wealth management space. And under his guidance, the company's under management grew to almost 150 crore. So once again, everyone taking out time for this interactive session. So let me start with you, Anand sir, first. Since the beginning of this pandemic, RBI supported the market with various measures, and along with that, they reduced the repo rate by almost 115 basis point between March and May 2020. So they supported the market quite well, and they helped to regain the growth. And what we have seen, last year, when a good part of the population got vaccinated, and when the COVID cases started coming down, so then the market participants, they started believing that RBI may start hiking rate. And if I'm not wrong, since September 2021, yields started moving up.
Right.
Anticipation only. And in May this year, RBI surprised the market by hiking the repo rate by 40 bips, which was followed by another 50 bips. So, Anand sir, what are your views on the recent monetary policy and what we can expect from RBI policy, which is scheduled in August and going forward also?
Thanks for the introduction. So yes, let's first understand why does RBI do what it does, right? So inflation is all about liquidity, and RBI uses the repo rate hikes and the CRR hikes effectively to control the liquidity in the system, thereby reducing the supply of that particular currency, right? So that's the reason why RBI is looked upon as an inflation controlling and also growth inducing institution. Yes, it was a surprise that it suddenly came and increased the rates by 40 basis points, which was not expected at that moment, while everyone was expecting. But at that moment, it was more of a surprised that it did. And it also very rightly said that, it is moving away from the accommodative stance that it has always had, primarily because, inflation was going through the roof and it was expected any moment. What I think that they've done is very important and very necessary, because you can't have a great growth and also have great inflation. I think anything in moderation is always good. Since 2020, the rates have been going down, and most of my investors who have been investing in debt were actually looking at negative real interest rate. And this move from away from being an accommodative to a little more right stance that the RBI has taken is going to be good for the country in general. And having said that, what do I expect going forward, especially in August? I think maybe another 25 basis points. Overall, maybe another 35 basis points is expected. And maybe in total, in the next 6 months to a year, we may see about 70 basis points, 75 basis points kind of a rate hike, in my opinion, because I think they will also watch out for two important things: how is Fed rising its interest rates, and how this inflation is panning out. With these things in their mind, they will try to increase the interest rates, and at some point in time, they will stop it. So good. This is extremely good for India, but anything in excess is not good. So I hope that they stop it in the next 50 to 75 basis points kind of a number.
Okay. Sir, any particular thing you consider like RBI should look for, in next policy? There are any two things you want to highlight about which will decide the direction as well as the velocity also?
More than inwards, I would see outwards, right? If tomorrow there's a de-escalation of tension in the Eastern Europe, I think that's a very, very good sign for India. That is when RBI may think, I'm not as smart as RBI governor, but that is where he may think that, okay, let me now again prioritize growth over inflation. So I think it's more global that he would look for than internal, because I think internally we are all strong. India can still absorb this kind of an interest rates and all that stuff. But if the tension de-escalates rather, I think he may stop rising interest rates, because what I've seen from this particular governor is that he's very growth oriented, which is good for the country like ours. So one important point: de-escalation of tension across the globe, especially in the Eastern Europe, which can bring the crude oil prices down.
Absolutely, sir. Thanks a lot for your insight. Now, sir, my next question is to Vikas, sir. So inflation, definitely, it's a big concern. And right now, what we can see is it's not a local problem. It's a global problem now. And recently, we have seen the US CPI number. It is coming at it has almost like 40 years high at 8.6. And we got the CPI print for our country, and it came as 7.04, which was marginally lower than the April number. So what is your view on inflation in Indian context, and how it will impact the bond market, and will it have any kind of impact on the growth?
Hi, thank you. I think inflation definitely is a cause of major concern globally, as you rightly put it. I think the mindless printing by the central banks for almost 2 years have actually resulted in loose liquidity flowing around across the globe. And it is not the case with India or any other, but a ballpark number says that around $7 trillion were printed by various central banks put together, which is a hell lot of money, which ultimately has resulted in inflationary conditions, further aggravated by the Ukraine war. So, in context of India, most of the inflation which we see here is imported, whether it is through the commodities like oil or through the metals. This all is largely imported, where we have very little control. To be honest, inflation due to the oil has an impact on every other commodity or every other goods and services which we are using, because everything needs to be transported. So that impact, and yes, government from its end has done its bit by reducing 10 rupees on excise on on fuel. But that's not enough because fuel prices have almost doubled from what they were, and it is far higher than the comfort of RBI. Having said that, it has to be balancing. RBI needs to be seen as balancing between growth and controlling inflation. So I think that's why probably this time round there was an expectation in the marketplace that RBI may tighten liquidity as well to control inflation, but they avoided it. So they only did a 50 basis point CRR hike. 50 basis point repo rate hike, and they have not touched the CRR, which was a market expectation. So going forward, if the oil and other commodities don't cool off internationally, we may see RBI doing a CRR hike as well. So which will definitely result in terms of sucking up the liquidity from the system and would have an impact on interest rate overall rising. Having said that, I think market is always forward looking. So market has already discounted the interest rates hikes. That is clearly visible from the 10-year GSEC rate, because 10-year GSEC to my mind has gone up by almost 150 basis point, while RBI has raised only 90. So market has already discounted that. So I think yes, the thing to watch very closely currently is what happens on the oil front, because metals, again, because of the pandemic in China, metals have cooled down a little bit, and there is an expectation that metals can cool down further if the pandemic situation remains in China. But I think oil is the biggest spoiler here. At $120 to a barrel, it definitely is not in the comfort zone. What will impact oil? I think the biggest positive for oil prices to cool down would be the Ukraine war coming to an end or de-escalation there. So I think that's the basic thing. But having said that, if the inflation persists, as you have put the question, the RBI, we will be seeing RBI doing the CRR hike as well, which will result into further tightening of liquidity and rates.
Thank you, sir. Sir, but my next question to you is, sir,
Yeah.
if they hike the CRR, definitely,
Yeah.
as you rightly mentioned, the liquidity which is maintained in range of 4 lakh to 5 lakh crore, which is
Yeah.
again, I mean, it is at a very high level. So if you look at the pre-pandemic level, so it was way below than what the RBI is maintaining at this point of time. So
Right.
will it impact the growth also to that extent?
See, initially it will not, but please remember that right now we are in June. So if we start hiking CRR, if the inflation doesn't come in control, then probably the first hike may be of 50 basis point. They may have to hike again in September to December quarter, which again is a busy season. So, and we have only seen the nascent beginning of credit growth in this country. So for last couple of years, we have not seen credit growth. We have just started seeing green shoots of credit growth. But if that happens, then it can impact growth also over a long period. At least it will stall the growth for the time being.
Certainly, sir. Sir, thanks. So just to summarize, definitely, I mean, you rightly mentioned that inflation, definitely it's a global issue now. And now it is not limited to like one or two economies, but yeah, whole world is impacted due to this. And in India, just to share some numbers, in last like 5 months, inflation is more than the RBI's tolerance level. So to share some numbers, in Jan it was 6.01, in February it was 6.07, and in April it was 7.79, and in May it came down to 7.04, which is again, I mean, it is higher than the RBI tolerance level. So as you mentioned that the government, they reduced the taxes on fuel on, if I'm not wrong, it was done on 21st of May. So on this number, on the main number, it had a very little impact on the May's number. So, but we will see the full impact in probably June number. And in last policy, RBI also revised the inflation projection for the FY23 by almost 100 bips. And like they revised it to 6.7%. So as you rightly mentioned, crude will be the big thing. So 122 पे थोड़ा सा मुश्किल है for a developing country like India. So now coming to the next question, which is for Rajesh sir. RBI hiked repo rate in last two policies. So in your view, how long this rate hike cycle will continue, and what terminal repo rate you can expect?
So I was saying that where the repo rate goes, it's the most important factor which dictates that is how inflation pans out in India, and so let's have a look at the India inflation stuff. So I see the inflation in US as a bigger issue. The economy is red hot, and the Fed has delayed. In US, the inflation numbers started going up just about a year back in April 2021. And the Fed acted initially. They kind of came up with a story that it's all transitory and stuff. So the whole issue about inflation, and the biggest issue about inflation, is if inflationary expectation gets entrenched in the mass psyche. Because as per the normal, theory of macroeconomics, as you tighten the money supply, the aggregate demand goes down and the price will adjust downwards. That doesn't happen if inflation has got entrenched in the mass psyche. If we look at our own, when Raghuram Rajan was there about, 5 years back, and those are the days when India was, typically used to have 8 to 10% inflation. If you go rewind 6 years back and periods prior to that. And so even the entire regime of bringing down the inflation from 8% to 2-3% range, you would have seen India had gone through, even though all the BJP government had come in and they were doing many things which were right in terms of structural stuff and things, but the economy was not firing. Economy was not firing because the inflation had to be, taken out of the systems, and it was a long, drawn-out process. The same thing happened in US in 1980 when Walker was there. And inflation had gone up to 10%, 12%, and it persisted there for 3-4 years. Once it is there for some time, it gets entrenched in the psyche. Then you say that my salary should be connected to every year I should get a 10% salary hike. Every year my rent contract should go up by 10%. So it becomes sticky. Even though the aggregate demand is kind of contracted. So the situation which is most feared, and I think the most important factors both for the debt and the equity markets today, both in US and in India, is that when you tighten the monetary supply, economy may go into recession and yet inflation remains high. And that is the time when Fed or the central bank in India is left with no tool to stimulate the economy back. So getting back to India, I don't think while in US, things have been delayed by a year. There also, it has not been delayed too much. So it's just a borderline case where it has been kind of delayed. So it's difficult to figure out whether they are going to have a hard landing. In India, I think inflation, 40-50% of the constituents of our CPI numbers are around food, are around fuel. So food is something which is not a big biggie in the sense that the government has the capacity to manage the supply and bring down the food prices. And any which way this year, the monsoon is expected to be, at least on the good side. So on the food part, already the government has taken a few steps like reduced excise duty and also, put export tax on the metals part, the steel part, which has kind of reduced the domestic prices of steel. So there are a number of steps which have been taken. I don't think the inflation has gotten out of control. Obviously, it's also being fueled, as our earlier panelists were talking about, by Ukraine. So if Ukraine war comes to an end or something, so oil is a big constituent, though I think it is manageable. So net, I don't think inflation has gotten out of control in India. While there are possibilities that it has happened in US, I would see the repo rates peak at 5.756 range. I don't see it going beyond that. And as far as the longer end of the curve is concerned, somewhere around 7.75, 7.88. I don't think it's going to go beyond that, even though the trends do persist. But firstly, RBI now has the tool, because one has to realize that with oil prices high, RBI has to run down its FX reserves. So if it's running down the FX reserves by $50 billion, to that extent, it can go and buy the bonds. It has the tool to go and buy the bonds outright, because that FX is sold and bond is purchased in its balance sheet. So they have the tools to manage. If I was the central bank, I wouldn't allow 10-year rates to go beyond 7.88, because it will harm the economy. So nutshell. On the shorter end, the repo hikes could go to 5.75, the repo rates 5.96, and the longer end is, it's already there, 7.6. It's there, 7.6. Technically, it could sell off to 8. I see at around 7. This is a good opportunity to, put money at the longer end.
Thank you, sir. Sir, as you rightly said, again, repo rate, if you look at it, so we are still below the pre-pandemic level of 515. So even though the repo rate was hiked by almost 90 bips, but then also pre-pandemic level was 515. So 515 se bhi abhi niche hi hai, 490. And a part of market also believe that in next policy, RBI definitely, they will look at the numbers, inflation numbers, and if it is again high above the comfort level, then a part of market believe that RBI may go for almost 40 bips also. 25 to our in-house view is that RBI will go for 25 bips, but I was reading few reports where people believe that RBI may go for 40 bips also, and they will continue with 25 bips in September and December policy. So all total terminal repo, we are looking at something around about 6 to 6.25 next by January or February, you can say. So now my next question is to Prakash sir. Sir, in last 7 and 9 months, we have seen lot of volatility in market. जैसे ही market को लगने लगा था कि RBI will now step in, they will hike the rate. So definitely this was factored in most of the segment of the market. And in next few months, which are the category where you expect the money will flow in, and why exactly, sir?
Thank you, Abhishek ji. The basically thing is that the bond market is volatile in past few months, but you see that in the coming month the repo rate will be increased and the 10-year GSEC will be 7.59 on today's. If we see 10-year GSEC, it will be 7.59. And in my thinking, it is the best time to invest your money in long-term government securities. And the best thing is that if you invest in GSEC, then you will lock your interest rate in today's market point of view. And if you see that in Nivesh Lakshya fund, it will be better to invest at that time, because the investor that invest their money, they will be locked their yield at that time, and it will be benefit for them. So my point of view, that investors should be slowly invest their money in debt market. See, basically in equity market, most of the people, when the market is down, the people will ignore invest their money in equity market. But if they invest their money at that time, they will earn more money. In the same time, in debt market, when the GSEC will be 10 years yield will be high, the investors should be slowly invest their money in long-term debt paper or dynamic bond funds. This type of funds they will be invested.
Staggered investment. 100 रुपए डालना है, अभी ईड्स बहुत ज्यादा अट्रैक्टिव है, आप कुछ पैसा अभी इन्वेस्ट कर सकते हैं आप.
तो बेसिकली मिसकंसेप्शन इज दैट कि इक्विटी मार्केट में लोगों को पता रहता है कि मार्केट अप एंड डाउन क्या होता है, उस हिसाब से उन लोग क्या करते हैं कि द क्लाइंट विल आपसे क्वेश्चन नहीं पूछते, बट इन डेट मार्केट उनके पास उतना नॉलेज नहीं होता है. बेसिकली द मेन प्रॉब्लम इज दैट. सो इट्स द बेस्ट टाइम टू इन्वेस्ट इन डेट मार्केट थ्रू एसआईपी. जो इक्विटी में एसआईपी बोलते हैं, डेट मार्केट में भी सिस्टमेटिक इन्वेस्टमेंट प्लान की तरह उन्हें इन्वेस्ट करना चाहिए, और इट इज द राइट टाइम टू इन्वेस्ट इन लॉन्ग टर्म डेट.
Absolutely, sir. Absolutely. So now coming back to Anand, sir. Sir, just wanted your view. In last couple of years, we have seen that like funds like roll down funds with roll down strategy, they flooded the market. I mean, be it in the form of ETF or index fund or probably normal open-ended fund also. So, बहुत सारे fund launch हुए हैं, and they mobilized a good amount of AUM. If I'm not wrong, in ETF and index fund, they collected something about 60 to 70,000 crore. And
Right.
this is excluding the open-ended fund where they run a roll-down strategy. So for our viewers, so what exactly is the roll-down strategy? And is there any merit in investing in roll-down funds? And what are the things one should consider before investing into any roll-down fund?
A brilliant question. Roll down क्या होता है? I mean, essentially, you build portfolios of securities with a target maturity. It's like I'll buy 10 things, and those 10 things are expected to mature at the end of 3 years, 4 years, 5 years. You have a certain maturity date. And as the money comes in, I mean, these are open-ended. इसमें कभी भी आप invest कर सकते हो, right? So जैसे जैसे नया पैसा आता है, जो average maturity बचा है, जैसे अगर आप 3 years का maturity start करते हो, अभी 1 साल हो गया, तो the next, I mean, if you go and invest after 1 year, at that particular time, the fund manager will buy 2 years worth of maturity. This is nothing but to keep the average. So the other question that you asked me, what is the merit? There is a lot of merit, especially when it comes to debt mutual fund, especially in the category of 3+ years. The moment you go to 3+ years, the taxation works beautifully in your favor. This applies to any debt mutual fund for that matter, right? Especially when you come to roll down strategy, right? If you see that your maturity and the average maturity of the fund that you're investing is matching, I think you should invest into a roll down strategy, primarily because this roll down will exactly match your financial goals whenever you need it. So there is a big merit, and this applies to not just when the new fund comes, this applies when you invest into an existing fund also. Just say when you want to invest into a Nivesh Lakshya fund and you see that this fund is maturing at the end of, let's say, 10 years, example, right? और आपको ये पैसा अगर 10 साल नहीं चाहिए और डेट में ही रखना है, you have GSEC fund, right? And perfectly matching. आपको पता है कि आज अगर मैं निवेश लक्ष्य में डालूंगा, for example, you will make about 7.5% for the next 10 years to come. One issue with this entire roll down strategy, which people have to keep in mind very clearly, is that this will be subjected to volatility. Yes, आपको पैसा 10 साल में उतना ही मिलेगा जितना आपको रफली है, but it may go through ups and downs. So 7.5% is what you'll make, but for all you know, the NAVs keep fluctuating, and this is a small bit of an important information which all the investors should know. And the other general issue with this particular style of investing is that अगर समझ लो कल large पैसा आ जाता है और large पैसा withdraw भी हो जाता है, big inflows and big outflows can impact your NAV to a smaller extent. So you need to keep these two things in mind, but set this apart. Any product will have goods and bads. I think this is one of the best investments to go for, provided you know when do you need your money, and if that money is matching the average maturity of that particular fund.
After 2019, what we have seen is close-ended products, FMPs. So basically, the total AUM was close to 1,25,000 crore at that moment of time. Right. And now it has reduced to something about 30 or 40,000 crore. So it has reduced significantly, and most of the investors who used to invest into close-ended funds, now they are considering roll-down funds. And as you rightly pointed out, the merit, it's an open-ended structure. So you can invest now, and in case of any kind of contingency, you can redeem whenever you want. So definitely it gives you the visibility of return, and like if you stay invested for the recommended horizon, आपका entry YTM will be your probably you can say your net return will be in line with your entry YTM.
Correct. And one thing which is very good here, Abhishek, is that the closer you get to the maturity, the interest rate risk comes down. जो volatility आपको होता है, अगर समझ लो आप एक साल ही रिटर्न, एक साल ही एवरेज मैच्योरिटी बचा है, तो आपको जो इंटरेस्ट रेट रिस्क का काफी कम हो जाता है. दैट्स अ वेरी गुड थिंग अबाउट दिस पर्टिकुलर स्टाइल ऑफ इन्वेस्टिंग.
करेक्ट कॉज आपका ड्यूरेशन क्लोजर टू मैच्योरिटी ऑटोमेटिकली कम हो जाता है.
एब्सोल्युटली
राइट. So now after discussing about the market and the roll down funds, there is something very important I feel from the Indian context, that is long-term investments. And whenever we talk about long-term investments, the only asset class which comes to our mind is equity. And very few investors, they consider debt for long-term investments. So my question to you, Rajesh sir, is how important the long-term investments are. And in a fixed income space, what are the various options available with investors? And let's not limit it to mutual fund, but overall, क्या options है investor के पास invest करने के लिए? So, sir, your views, sir, Rajesh sir.
So equity as an asset class gives higher returns, but there are periods. But that doesn't mean that a person's portfolio only has equity, because you need to, moderate the risk depending on the risk profile and age and stuff. So obviously each portfolio will, if you are handling, a large portion of somebody's net worth, obviously there is a debt component which will automatically be there. We need to manage it between the shorter end, medium end, or longer end, or whatever roll down strategy, things like that. So that's the first part of your question. The second part was within fixed income, what are the investment opportunities? And I think it's very, very interesting. I like a few months back, just 4 months back, the small saving instruments like national saving certificates were one of the best, or the pension senior citizen schemes were offering you the best investment avenue from the fixed income side. There was a time just a few months back when the guaranteed, all of us know that in India, the debt side, there is arbitrage created for the mutual funds, for the insurance companies. The guaranteed plans were offering interesting returns. It's now that I find that the best possible options are the longer end in the mutual fund, not the direct government bonds, because the coupons, again, because of the tax arbitrage, if you take direct exposure to GSEC, it gets taxed higher. Through the mutual fund route, it gets taxed lower. I would say in today's context, whether it's Nivesh Lakshya, whether it is Nippon Dynamic Bond Fund, bond yields could go up another 20 basis points. Nobody can time the bottom in the equity markets and tops of the equity markets. I don't think anybody should try to do that. At these levels, these are extremely attractive levels, and one should start building, bit by bit, the exposure here. So as of now, so while there are various instruments possible at different points of time, different instruments offer different, risk reward returns, and things are optimal. At this point of time, I find the long end quite interesting. So I think I strongly support what Mr. Rathi was talking about the target, all these roll down strategies and how they come. They are like FD replacement product. There's a huge market which you talk of. It's basically taking the concept to the people.
Absolutely, sir. Absolutely. And sir, in this context, I just wanted to highlight about Nivesh Lakshya Fund. So we launched this fund in 2018, and as per the strategy, this fund invests only into central government securities, and which are maturing in 2044, 45, and 46. So when we launched this fund at that time, the roll down period was 25 years, and now it is roughly 22, 23 years. So now, coming to Vikas sir, request you to please share some views about this fund and like what type of investor can consider Nivesh Lakshya fund and consider the current market. Is it prudent to allocate some portion of your long-term corpus in Nivesh Lakshya fund?
I think this is one very good product for all kinds of investors. I don't only restrict it to people who are looking at it from a long-term perspective, but somebody who wants to take a tactical call also, he can also look at this product. This product offers you no credit risk, no liquidity risk. Interest rate risk also is there, but as Anand ji has mentioned, that boss, जिस दिन आप घुसे हो, उस दिन का आपको yield मिल गया, you roll down में. So, and as Rajesh ji had mentioned in his earlier answer, that we are very close to the highs of 10-year G-Sec yield. So if we, as he mentioned that today currently we are at around 7.6%, and yields can at best go to 8%. And I think I agree with his view that yield will not go beyond 8% because RBI also needs to do a very, very large borrowing program. And government is the biggest borrower in this country. So they will not allow the yields to go up beyond that level. So I think it is a great product with no credit risk, no liquidity risk, and mitigated interest rate risk for people who want to do a long-term investing. So it's a great product. One, currently it is available at 7.8% YTM with a very, very low cost structure. So 7.8% YTM, and I think the cost structure is around 25 basis point, if I'm right, Abhishek.
Correct, sir.
So with a net yield to the investor of roughly around 7.55, it's a phenomenal product. Even if we don't get any mark-to-market gains, probably if we get closer to 8%, the yield on the product at closer to 8%, there are very, very bright chances that over a period of next 3 years, you will get mark-to-market gains as well in this product. With a 20-year kind of a maturity profile, even a 10-20 basis point mark-to-market gain would result into a very, very decent yield on the product. So there is a possibility that if you get 30-40 basis point mark-to-market gains, you will get, you can get upwards of 8% return. So that is a great opportunity in this fund. With no, and the fund offers you anytime redemption. It is very, very low cost, no credit risk at all. I would also recommend this product to somebody who's going to take a tactical call, because tactical call में अभी क्या होता है कि आपने कॉल लिया कि बॉस 10 year G-Sec 8% पे पहुंच गया है, अभी मेरे को लगता है कि यहाँ से 7.75 7.50 आएगा, या तो आप सीधा 10 year G-Sec खरीदोगे if you have that view, or you can buy a fund like this whereby you get a 20-year this thing average maturity. भाई जब अपना व्यू है ही कि interest rates are going to come down, contract by 25, 30, 50 basis point, then go as long as possible. And this product offers you a very, very long product. So I think it's a great product. I personally feel that out of the debt allocation, 20-25%. So अगर 100 रुपया total portfolio है, उसमें debt allocation 50 रुपया है, तो 50 रुपए में से 20%, which is 10 रुपया, should go into Nivesh Lakshya kind of.
Absolutely, sir. Absolutely. So as you rightly said, दोनों तरह के investor आ सकते हैं. Those who want to take tactical call and those who really want to go for like really want to stay invested for a longer period, they can definitely come in this fund. And absolutely, there is no credit risk. It's an open-ended structure, and in case of any contingency, you can redeem your investments also.
Anytime.
Absolutely. Question for you, Prakash sir. So recently, as we have seen, the yields of 2025 GSEC moved to 780 levels, as sir rightly highlighted. So in this segment, 2025 year segment, Nivesh Lux also invest, and the gross yield of fund is close to 780. So do you think it is attractive at current level, or investor should wait for some more time? Cause दोनों तरीके का सुनने को मिलता है कि मतलब ये 780 very attractive, we should invest. And there are other set of investors also who think कि 8 जाएगा, 8-10 जाएगा और 8-20 जाएगा तब हम इन्वेस्ट करेंगे. So sir, what are your views on this?
So in my point of view, देखिए basically the thing is that कि किसी को भी predict नहीं कर सकता कि इंटरेस्ट रेट का सिनेरियो क्या होगा. रूस यूक्रेन कन्फ्लिक्ट बोल लीजिए, चाइनीज लॉकडाउन बोल लीजिए, या इन्फ्लेशन की आप बात कर लीजिए, ये कहना मुश्किल है कि आने वाले टाइम पे वाईटीएम क्या होगा, इंक्रीज होगा, डिक्रीज होगा. तो इट्स द राइट टाइम कि मतलब द इन्वेस्टर शुड बी इन्वेस्ट देयर मनी इन स्लोली इन दिस टाइप ऑफ स्कीम्स. द थिंग इज दैट कि जब वो धीरे धीरे करेंगे तो द मेन एडवांटेज इज कि उन्हें ये पता नहीं चलेगा और उनका मनी, उनके जो अमाउंट्स है धीरे धीरे इस फंड में चले जाएंगे और धीरे धीरे उनका रिटर्न भी एक स्मार्टली उनका रिटर्न भी बनेगा. सो इन माय ओपिनियन it is the right time to invest in Nivesh Lakshya fund.
And sir, as you rightly mentioned earlier also, कि SIP करना है debt fund में, so definitely even this fund can be considered. Because obviously SIP is a phenomenal tool, and it is nowadays like most of the investors, they invest into equity through SIP, but debt में भी SIP कर सकते हैं in a fund like Nivesh Lakshya fund, और कोई सा भी longer end का जो fund होगा उसमें आप SIP भी कर सकते हैं. Absolutely sir. And as we speak about this fund, so the YTM of the fund is close to 780. And as I told you earlier also, there are few investors who are saying that कि 8% जाएगा तब हम इन्वेस्ट करेंगे. So definitely, I mean that 8% psychologically it's a very good entry point, but we really don't know when, I mean like when we will get to 8%, और हो सकता है कि शायद नहीं भी जाए. If tomorrow the war is over and crude comes down to something about say 70 to 80 levels, hypothetically saying, so in that case we may not touch 8%, and हो सकता है yield drastically नीचे भी आ जाए. So in that case you will lose the opportunity to invest at the current level of 780. So in this case, sir, we always say one thing: in a fund like Nivesh Lakshya fund, or at this point of time in any debt fund, if you want to invest, stagger your investment. And in a fund like Nivesh Lakshya fund, if you had 100 rupees and you want to invest 100 rupees, then at current level you can easily invest 40 to 50 rupees. And उसके बाद आपको जैसा लगेगा, थोड़ा yield ऊपर जा रहा है, नीचे जा रहा है, you can invest accordingly. So one more thing I would like to highlight about in general about the economy, sir. What we have seen, like when the countries transition to developed country, then they witness a fall in inflation and interest rate. So just to give you some example, in year 2000, 10-year bond yield in US was close to 6.5%, and in 22 it dropped to 1.9% and currently hovering around 3%. So we have seen a similar case in case of Germany also. So in Germany the yield was 5.5% in 2000, and right now it is less than 0.5%. And in India, the 10-year yield in 2000 was at 11%, and currently it is around 7.5%. So we really don't know like what is there in future. So it's better to lock in the current yield. Nivesh Lakshya fund is a perfect fund to capture the long-term yields. So I would like to thank all our esteemed partners who took out time for this session and shared their extremely good insight about the market and the available opportunities. So thanks a lot, sir. Thanks a lot, everyone. Thanks for your time.
Thank you.
Thank you, Abhishek. I think it was a pleasure to meet fellow industry friends and hear about their views, and also to talk to people about our views in terms of what this product has to offer. I think it's a great product. You guys have made it well. I think one suggestion I would like to make that probably you should reduce the exit load on the
Sure, sir. Feedback taken, sir.
Yeah.
Thank you, Abhishek.
Thank-
Good luck to all. Thank you.
Thanks. Thanks.
Thanks.
everyone.
Thanks.
Thanks.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.